So welcome, everyone. This is all really music to my ears. I should mention that I got into AI in 1979 thanks to a gentleman called Herb Simon, who convinced me that AI was around the corner, and I believed him. And I believed it all along. So, the word tsunami, all of these things really resonate with me. It took 40 years instead of 10 years, but what's the difference in the larger scheme of things? And here we are. And I think, as a sort of an AI insider, I guess the one insight I want to share is that for most of my career, AI has overpromised and underdelivered. And this time around, I'm not quite sure what it is. It seems like it's over-delivering on multiple fronts. It's over-delivering in terms of capability, but I suspect it's also over-delivering in terms of some of the risks that lie beneath the surface. The fact is that no one quite understands why these LLMs work as well as they do. I think we're all surprised by this. And so while it's sort of a pleasant surprise, there's always sort of this discomfort that there's something lurking beneath the surface. And we know this, right? We know that these machines are capable of behaving maliciously, or they're capable of behaving in ways that we never really envisioned. And so it poses like a real sort of a risk management problem. And this is a question that I've been getting a lot, more generally is, does AI increase the risks to individuals, to organizations, and to society in general? And I'd like to sort of tailor or make that more specific for this audience and specific to finance. And so I'll just open and I'll open with a broad question to my panelists, which is AI increasing or decreasing systemic risk in finance?
Yeah.
So let's start with that question.
Well, full disclosure, I'm not a finance expert, so I'm not going to give you the final word on this for sure. I think a little background on where I'm coming from is important because my work is mostly as a lawyer, general counsel, governance, risk, and ethics expert. And I've done that my entire career, both on Wall Street as a transactional lawyer, but then as a general counsel of several different kinds of companies, not including banking and finance. So my background in looking at these issues is more of an operational risk kind of a person who has looked at the plumbing of risk management, enterprise risk management. How do you create it? How do you deploy it? What's should be customized for a specific kind of company and footprint and geography, et cetera. So over my career, I've done that both as an operator within companies and also as a consultant looking from the outside looking in and helping both boards do the risk governance piece as well as they can, as well as helping chief risk officers, general counsels, and others. So I just want to put that disclaimer out there because you will not hear the things that you'll hear from Melissa from me. Because she is a real expert in this area.
So, if I may interrupt,
sure.
Maybe you can say a few sentences about your book. And I was intrigued by the title, Opening Pandora.
Sure.
Because one of the things I mentioned in my book is that AI is the first technology created by humanity without a purpose. And we're sort of, we're trying to find a purpose for it.
Right.
And we created this thing that we don't really understand and can't control. So say a few things about your book first.
Yeah, thank you. I appreciate that. The reason I wrote the book, it was really just an article to begin with, and then I was asked to write the book. So it kind of blossomed into something much bigger than I expected it to be. But it's about how do we decision makers, board members, executives, policymakers deal with this. And tsunami is the word that I use frequently in my book, tsunami of change, explosion of different kinds of technologies. How do we deal with these exponential technologies in an orderly and thoughtful way while keeping up with incredible speed of light, I guess is one way to put it. And so I started by looking at Gen AI as the most fundamental and dramatic and revolutionary set of technologies that are changing right now, but it's also affecting other areas, other buckets of technology. So I looked at 5 buckets of technology, including Gen AI, but also biotech and synthetic bio, advanced materials, automation, robotics, and frontier computing. So I looked at 5 buckets and asked the question, how do we govern this? How do we, as board members and as executives, deal with these issues in a way that allows us to protect shareholder value, protect stakeholders from the downsides, the risks, the unknown unknowns, as well as some of the known risks. And so in the book, I start with overview of the technologies, but the real core of the book is what I call the exponential governance mindset, which is 5 elements of what we need to do to conquer this or to at least deal with it. And that's really developing a much more 360 holistic approach to technology governance within our companies and organizations. And that means that the board is talking to the management and they're talking to the frontline IT workers and who are usually scattered and all over the place. There has to be a holistic integrated approach to tech governance. And AI, of course, is now a huge component part of that. And it may not have a purpose, as you say, but it's suffusing everything. So we need to understand what the purpose can be and how, I loved some of the things that Mike just shared with us. How you put those harnesses and guardrails, you can, but you have to have the will and also the resources and the vision and everything else. The culture, that's something I've dealt with for many years, is how do we create an ethical culture in our organizations? And so all of that. And so it is a very powerful thing that we have now. Whether it's purposeful or not, I think is up to us. So, that's just one flavor of this 5-pillar thing. I could go on, but I don't want to steal anyone else's time here. But it's really important that we are methodical and at the same time agile at dealing with these issues and define the purpose of why are we using AI and those kinds of things.
Melissa, do you want to introduce yourself?
Sure.
And your work
Yeah.
in the credit space and then
Yeah.
segue into my question?
Which was,
Does
does AI exist and is it going to kill us? Hi, everybody.
We'll stick to systemic
Good
risk.
morning. Yeah, it's great to be here, and I think we're going to be exceptionally complimentary because I'm coming to this conversation very much from the ground up. I'm Melissa. I stood up and lead FinReg Lab. We're a DC-based nonprofit research organization. And I think part of the reason I'm here is because Dick and I used to have lunch. We worked together in the Treasury Department, and he was bringing the capital markets and what he was dealing with, honestly, from the Hill. And I was responsible for leading the Office of Consumer Policy, where it was early days and we weren't even using the term fintech. And to be clear, this was in the Obama administration. I was, and Dick was, and we're now facing it head on, confronted with, from a policy perspective or policymaker perspective, how are data and technology being used in new ways, new and novel models, data that we hadn't thought about that is now digital information that could be brought into financial services and lots of aspects of the financial system, whether it's things like credit underwriting, which is where my organization has spent a lot of time, or, things like are you who you say you are, know your customer kinds of expectations, which also speak to questions that we're grappling with now around identity and even bots, as Mike was talking about, right? How do we know if it's a human or if it's a bot? Well, data and models are going to help us figure that out. Humans aren't going to be able to stay on top of that, and that's been true for a while. So the work that we do at FinReg Lab is engaging with industry stakeholders and the broader ecosystem that is ultimately going to influence public policy. So I'm talking about, importantly, academics, which is why it's a pleasure to be here in the room with you all, but also consumer advocates, right, who are really thinking about these questions around data and models and ultimately financial lives outcomes that come from using more complex models and new data insights in the financial sector and in the financial system. So this question of, what does it mean? In terms of potential risk, it's not even just questions of systemic risk. It is also questions of basic consumer protections. It's questions of model stability at the bank level, as well as obviously broadly the more systemic level. So I took notes and I'm going to keep using them. When we interrogate these kinds of questions, we really do sort of start very brass tacks, right? Like, what are the data that are being used? What are the data that are being used to train the models? What kinds of models are you actually talking about? For instance, I think most of us in the room know AI, certain forms of AI, machine learning, supervised machine learning has been used by the banking sector for decades, and this isn't new. On the other hand, the policy community hasn't necessarily kept up with really sort of getting and building confidence in even supervised machine learning and how they've been used. Just to be really concrete, the prior administration on the consumer protection side, there were real questions and direct messages to the financial sector, especially the regulated banking sector. If it's a black box model, which many considered even supervised machine learning to be, essentially stay away from it, be very careful about it. And that has a real effect on sort of how the financial sector, where the regulators are, what messages they're sending, how that's going to influence how the financial sector is ultimately using some of these data and some of these more complex models. Fast forward into 3 years ago, non-deterministic models had hit the scene. And many of us are using them. I'm using them to figure out how I'm going to grow my garden this year. But we're also using them by day in terms of our day jobs. Yet we have to keep the regulatory community bringing them up to speed with how does this work? How is it being deployed? Where, in which use cases are they being deployed in? And then, is it just one static model or are they models on models and agentic types of models? And this is introducing a lot of uncertainty and a lot of complexity. And that does introduce risk without question.
Melissa, if I may
Yeah,
interject
jump
here,
in.
because
Yeah.
you mentioned complexity,
Yeah.
identity. In the work that you do, and by the way, Brian Kelly is going to be talking about complexity, and he's been talking about sort of the virtues of complexity, which is music to my ears.
Yeah.
But in your world, does it create a tension between sort of, transparency and complexity? Are those two things at odds with each other?
So that's a good question. We have not yet done explicit work looking and using non-deterministic models, although I'll talk about what we're going to be doing in that area. What we have done in the question around transparency and complexity and the opportunity that is offered is we have interrogated supervised machine learning models for basic questions of can you generate sufficient confidence in how those models are deriving those outcomes? Because in the case of credit underwriting, I'm not sure how familiar everybody in the room is, we have very explicit legal obligations around being able to explain to a customer why they got the outcome they received. Adverse action notice is the shorthand for what has to be generated. That means you have to sufficiently understand how is that model deriving its outcome and then tell the customer what the decision was that they got. We also have laws on the books that are explicit around interrogating for model unfairness. So are there outcomes from the models that create differences between different populations, protected class populations in particular? There too, you have to understand and interrogate what is the model doing? What are the outcomes that are coming out of the model? And are they creating these differences? But what's really valuable about machine learning, supervised machine learning models, and then techniques for explaining those models is you can look at the outcomes and you can actually help to derive more fair, more balanced outcomes. Now, this is controversial. And different administrations have different points of views about these fair lending obligations on non-housing credit decisions. But recent history banks, lawyers, and the regulators had been very explicit about setting these expectations around ultimately evaluating for fairness and encouraging industry to find more fair outcomes. And the research that we've done, to your point about transparency, is you can actually answer the questions that you're legally obligated to answer and derive and result in more fair outcomes than more traditional historic ways of interrogating for this kind of fairness question. So that's in machine learning land. We're now in non-deterministic models, and there is a lot to better understand in terms of what level of competence, what techniques you would employ when you are using non-deterministic models in use cases of different types. We do know, for instance, in credit, just to jump into some of this, that some of the fintechs, in particular, some of the non-banks are actually using the language model techniques to better interrogate the data that they would then bring into a more transparent machine learning type of model. And that's quite encouraging in terms of getting better insight from the data that you're actually bringing into your model decisioning. But nevertheless, sort of turning loose a non-deterministic model in a highly sensitive use case like credit decisioning is something that I think, remains to be seen. What does that ultimately
So as a follow-up
look like?
question to that, and this is for both of you,
Yeah.
is so are you optimistic that AI will level the playing field, or do you think it will lead to greater inequality?
Well, I'm going to respond from a more big picture standpoint here. I think for the shorter term, I think we're going to see a very uneven set of development. So I think if we sort of slice and dice society, for example, within our own country, and then look at countries across the world, there's a lot of inequality right now between those who have the resources to be able to do all the things that you talked about, even companies. Small startups are going to have much, mid-sized companies pre-IPO, they're going to have much less ability to do this right than some of the bigger companies, the financial institutions that we all know. And so we're going to have a real inequality, I think, of what you can do with it and how well you can guardrail it. And so there'll be a lot of cases of startup to medium to, larger companies that are moving fast and breaking things rather than moving fast and thinking about how you build these things. And so that's within the business field, the corporate field, certainly speaking about the US. If we think about the development of sovereign AI in different parts of the world, that is more intrinsic to their national languages and everything else that goes with their culture, we're going to see, I think, unevenness too. It's going to be basically the US, China, and a few other countries will have the real resources and ability to get these things done in a way where there are guardrails and there are regulations that are built around whether it's financial or some other kinds of uses of AI. So I think there's going to be a lot of inequality. There's going to be a lot of struggle, and we will continue to have this move fast and break things attitude for the startup community and the technologies or the companies that are technological focused. They're going to end up having problems. And part of me worries about, it's good that the banking industry and the financial industry are looking at the meticulous details, but a lot aren't. And so I think we're going to see some serious problems happen with sort of we heard about the agentic AI community is going to be 50 or 5,000 or maybe 1 million to each person that we have on Earth. This is going to create chaos and potentially really bad downsides and risks. And so,
So, one of the data points that I hear is that perhaps it's increasing inequality at the individual level, but at the country level, the data seems to suggest so far that technology has been more of a leveler, that the difference sort of between countries has narrowed, even as inequality within countries has worsened. How do you think about that? So, because you were talking about sort of the divide
Right.
I guess I'm sort of pushing back and saying, could it
Yeah,
actually be
you're
the
right.
other way at the country
Yeah,
level?
and I think that the good side of this story, which hasn't unfolded completely, obviously, but the bright side of the constructive side is just like cell phones gave African nations an ability to leapfrog ahead of, hardwired phones. A lot of this is going to allow a lot of countries to develop as long as they have some of the resources they need, the data centers and the compute and the cloud, as long as they can purchase some of the surrounding necessary infrastructure and power in terms of energy and water and so on. Yes, I think there is real opportunity here for other countries to create their own path of success.
Yeah, because as you were talking, I'm reminded of India's Aadhaar system, which brought 600 million, unbanked people in,
Absolutely.
and who are now, applying for loans. They can apply online for loans, and these people were unbanked, just, 10, 15 years ago. And so, Melissa, that's a great segue to your work.
Yeah, for sure. And Aadhaar is admirable, and there was a lot of government engagement in building Aadhaar too,
Yeah.
right? Ensuring that, the processes for getting people onboarded in the first place, the identity proofing, identity verification, the stacks, right? The applications with respect to Aadhaar. So it is it's an interesting model as we think about what is the ideal engagement and role of government as we're moving into a new world of I keep using this non-deterministic models because it is with intention trying to acknowledge there's a lot of uncertainty around how those models are deriving their outcomes, and there's going to need to be engagement and understanding from government as well as industry as we're going to deploy Gen AI safely and responsibly in the broad system, but the financial system. But go ahead. No, jump in.
I was just going to your point, I think we are in need of a really good sort of three-way collaboration between government, society, and
Right.
business. And that's always the answer to these really big existential or, revolutionary changes, climate, other things, that you need to have that partnership between government and business, and then have the NGOs and civil society have their say too, because they are the stakeholders that are affected most as users or as victims or whatever it is that it ends up being. And I think we're in a very turbulent period right now, certainly in the US, because of the lack of any kind of thinking of regulations, unless it's at certain state levels, which isn't good enough. And then we have sort of the national security global competition between the China model and the US model, and then some other models that are rising. And so we're in a period of great uncertainty about how we tackle some of these downsides that are coming. And unfortunately, I think it's going to require a serious event, a serious global event for governments to start talking to each other, let alone start talking about their own countries. And I will say, an interesting thing that I think many of us observed in the last few weeks is that with the rise of Mythos and Project Glasswing, and the fact that this could be the cybersecurity event pre-quantum to de-encrypt the world because it's such a powerful AI model, that whole thing has rattled the cage of the US government to start thinking, oh, we need to get our hands on this and understand this because it might have reverberations for our national security. So I think it's going to be constant back and forth, but it really has to be a partnership at the end of the day for these things to be thought through carefully and constructively for society.
I want to come back to this question of regulation and the role of government, but before we do this, Melissa, I didn't let you finish up answering the question about
I mean, it's a good segue because Mythos is raising, it appears, a lot of concern and anxiety. And apparently somebody on my team said that even the MCP, and with respect to Mythos, had its own glitch. And that gets to both the fact that even if our largest institutions in the US are quite sophisticated and quite skilled and quite careful about how they're testing and learning, we have, Mike, I'm going to put you on the spot. How many small banks still standing in the US who are without the skill set, without the knowledge, without necessarily even the third-party vendors? I mean, thousands. I don't know how many we qualify now as small banks, but 4,000 small institutions who aren't keeping up. And when we have these powerful AI technologies that can break through and break things, who's going to be most vulnerable? And where we worry most about are the community banks and the smaller banks that really just don't have the ability to keep up. So I agree. It does come back to then, well, how are they getting the knowledge? How are they getting the insight? And importantly, what can regulators and the US government and other governments and other jurisdictions do to really bring the knowledge and the insights ultimately to the smaller institutions so that they are making sure that they've got the protections in place? But the community banks are a big potential vulnerability because of where the technology is going and their need to be able to, protect themselves at a minimum, let alone to your question about, keeping up and keeping in, are they going to be able to continue to provide the resources, the products and services that ultimately consumers are going to want and expect?
So since we sort of segued into regulation, finance is sort of full of instances of sort of well-intentioned but regulation with unintended consequences. How should regulators be thinking about AI? That is, what should they not do when it comes to AI?
Yeah. Shall I take this one first? What should they not do? I think we were having a good conversation at dinner last night. What they should not do is put their head in the sand, and I don't think at this point they are. I do think in the past, some of the concerns about the black box, I talked about that. And there is rationale for not wanting black box tools to be used, right? There are things that can be obfuscated within black boxes. There are outcomes that can create harm for the consumer. They can create instability and risk that create the inability to understand, or the models keeping up as the underlying data are drifting over time. So there's rationale for that. But that ultimately means that the regulators themselves have to have their hands in it. They have to be touching it. They have to be feeling it. Not to keep calling out Mike, but I mean, he was leading the OCC and really trying to make sure that the agency there was getting their arms around what are these technologies and how do they work. We think that they can go even further, whether they themselves are going to be sharing insight and intelligence in a way that makes it all the way back to, the tale of the many community banks that they regulate, but also making sure that they're keeping up with what the vendors are doing, what the big technology companies are doing, and thinking hard about concentration risk, right? If our institutions are relying on only a handful of model makers, that creates real risk. What happens when those models don't work, when they break, when they go down, when they go rogue, and you've got, millions or millions and people relying on ultimately what the banks themselves are building with those models. So much more test, try, have your hands on it and learn, and be a part of the learning exercise.
I don't really have much to add to what you just said in terms of the regulatory piece, but I do want to riff a little bit on an area that I think is super important for companies as well as regulators, and that is what Mike also mentioned about Morgan Stanley, the example, for example, of the culture shift within an organization to emphasize different kinds of incentives and different kinds of rewards, I guess, and behaviors. And one of the things that I think is really important for all of us to consider, whether we're company people or academics or just individuals, is what is the culture of the model maker? So going back to Anthropic, going back to OpenAI, going back to the firmament of model makers, I personally trust Claude more than I do ChatGPT. Why is that? Because I've spent some time looking at the governance within those companies and the track record, the history. And I think regulators need to look at that too when they're talking with companies, looking at how they've deployed and what they've deployed. When you have a company that started with governance that was kind of very messy, like OpenAI, it started as a nonprofit, then it moved into being something else. And its governance and its leadership culture has been quite iffy and spotty on and off, and continues to be from all the different media reports that we get about Sam Altman and some of the internal internecine warfare that's taking place between ex-leaders, current people, some of the employees. Going back to the piece of the culture, there is no sense of speaking up without fear of retaliation within OpenAI. But I would suspect that in Anthropic, they do pay attention to this stuff. And whether it's perfect or not, I think buying these agents and these models and these LLMs from a company that cares about these kinds of things is super important for a company who's purchasing these capabilities. And so I think the regulators also will be looking at, if it's a specific company, looking at those issues, if it's how you're deploying and what you're deploying in your own systems. I think it's important to bear in mind the cultural and the trust piece that comes. Doesn't mean it won't be a risky sort of outcome. Doesn't mean that Claude won't end up having the biggest, issue with some of their agents and capabilities. But it means that I think from a risk management standpoint, I'm going to bet on the company or the organization or the LLM that has a better cultural fit for me as myself or my company, because I want to be safe when I'm out there with my agents.
Right. So we've started talking about trust, and that's something I've been thinking about myself for AI and trust for 10 or 15 years. Sort of more as an algorithmic trader is sort of what the question I asked myself, after doing this for 10 or 15 years was, why was I willing to trust an algorithm that was wrong almost half the time? But I don't trust a driverless car that's really wrong, right?
Did you trust the algorithm that was wrong half the time?
Yeah, I mean, it's, yeah. I've been doing it for
Risk tolerance,
I've been doing it for 25 years. I'm wrong almost half the time, right?
Or able to make a big bet.
But the cost of error is low because worst case I'll lose some money. But driverless car, the cost of error is death, right? So that's extreme. And so I tend to think of trust as sort of an interplay of how often an algorithm will be wrong and the consequences of being wrong. How do you think of trust in your space?
I mean, the truth is we're still figuring it out. I mean, in the banking world, as we understand it, banks are being very intentional. They are off to the side, amazed at what code computing AI can do, how fast it can go, the efficiencies it creates, but they're not deploying it in high stakes use cases. Because these questions around what are the ways that you deploy it and you have sufficient confidence and you have sufficient oversight? When do you need the human actually in the loop, as we like to say? And when can you let it go? We are in learning phase, I would say, in the banking world. At the same time, probably in the banking world, but what we are learning from the non-banks, the fintechs, some of whom are willing to be sometimes more sort of willing to deploy and explore and take a little more risk. But those who are even very thoughtful on that side are really trying to think about, are there techniques, the computational power, the math that they're deploying, batch processing, the evaluations on the outside of it, smaller models, better data, so that they are ultimately using non-deterministic models, but landing in more accurate, less hallucination, better ability to control bias. But we are in iterating, testing, and learning. There's lots of work around red teaming, outcomes, evaluations, But as you heard Mike say, there's a lot of risk there too. How are the models not like learning and sort of cheating effectively?
So what is
So
the
it's
role of,
we're in the middle of figuring this out. Is
right? So you mentioned human in the loop, right? So where do we need humans in the loop? Because when it comes to trading, I often tell people that humans in the loop mess things up. That once you have an algorithm, you've done the math, trust it, accept, during sort of acts of God. But for the most part, there isn't scope for human in the loop there. How do you tend to think of like problems where, when the human actually helps in mitigating risk?
So there's a really great paper that I'll share with Dick and he can share with others. Mike, I shared it with you. MIT, Berkeley, and WashU economists have really been thinking hard and pushing themselves, these academics, around where is the risk as we look to the long term, AI to the economy, and how are humans staying on top, if you will? How are we not amassing an enormous amount of uncertainty debt? And it's a really great, thoughtful exercise. And the point there is ultimately it's about validation. And we are still in humans figuring out processes and how we deploy AI, but we continue to make sure that there is validation of what the models are doing. The answer isn't known, and it's going to be, use case application, systems application, where we are thoughtfully deploying it, testing it, but making sure that we can validate outcomes, figuring out technically how do we validate outcomes. But this notion of validation is going to be really important. And there is tremendous work for all of us to be doing to get that right. I'm not going to give you the answer because I just don't think we know it yet.
Yeah.
Sorry. But it's good work ahead for all of us to do. And the benefits are enormous.
As you were talking, I was struck by something, which is that there's a real sort of disconnect between the extent to which individuals are using AI, like we all use it all the time, right?
Absolutely.
Versus enterprise.
Yes.
And someone said the other day, someone said something that really resonated with me, which was that, I can develop something that used to take 6 months now in 45 minutes.
Yeah.
But to get it through the enterprise still takes 3 months, of like the validation and all of that. Is that
I hear similar frustrations from large institutions. Like, I can see it, there it goes. Look what the agentic AI did and what its outcome. But the certainty, banking is all about risk mitigation. And risk mitigation means understanding your risk and deciding which bets you're willing to take and which you're not. And for a large institution that isn't just responsible for what it's delivering to its customers, but is a part of an economic financial system, that reality of figuring out where and how you deploy it safely, responsibly is something that we're just in the midst of. I suspect we'll be in a different place probably 6 months from now with more sort of understanding of, frankly, where it's even more risky than we anticipate, but also how we're going to manage and mitigate the risks. So, but I hear that too.
I'll jump in. I think one of the exercises certainly larger organizations need to go through, we talk about stakeholders and, the trust that they might have in us, in a company, in a brand. And I think if we can, in a disciplined and systematic way, understand who the stakeholders are in our tech loop. So in other words, whether it's employees, data users, the release of agents, any number of things that are new risks or uncertain situations, we need to understand who our stakeholders are and then understand what their expectation is of the impact of what we're doing, whether it's a new service in a bank, biometrics that are being used, or some other privacy concerns, let's say. We need to understand what those impacts are as we move forward in the deterministic AI world, I guess is one way to put it, or undetermined sort of spread of agents. We need to be on top of that as companies, as organizations, whether we're banks or anything else. And I think they're having a very systematic understanding of impact on stakeholders will help us provide the trust that is necessary in this environment. And I think the resilience building internally to our organizations, integrating all of these issues into our enterprise risk management, into our crisis management, into our business continuity practices, doing everything we used to do, but doing it in a much more tailored and forward-thinking way is going to help us build the trust that when something really bad happens, we're able to sort of recover and pivot because stakeholders will trust that we're going to do the right things and that we have the right structure and infrastructure in place. I think of 10 years ago, more or less, JP Morgan had a big cybersecurity event. Well, they had been spending more than anybody else on building cybersecurity infrastructure, resilience. So they were able to pivot quickly and the market barely noticed what happened. Meanwhile, others who had cybersecurity events in the day, they had serious reputational hits. They had serious downsides in their market, performance. And so I think the same applies now and going forward, but in even a bigger way, that we really need to have those internal resilience structures and crisis management and the ability to demonstrate to the stakeholders and to the market that we take this stuff seriously. Some companies will do it, certainly in the banking industry, because they have a lot of resources. Others won't. And those that don't may disappear overnight. And those that try hard and have the courage of doing some of these things, but maybe not the resources to do it all, they might survive. But I think we really are in sort of a surviving mode right now, and some with resources will survive. But the culture piece is always going to be, to me, who's your leader and what are they emphasizing? Are they emphasizing, terminating 10,000 employees who they just hired last year because they needed coders? Or are they retooling, reskilling, upping sort of the ability of the existing population, maybe not all of them? So I think that trust gets built and resilience gets built over time. And that's a continuous investment that we need to make into, the stakeholder population that we have in our organizations.
Add on a couple thoughts.
Please.
One is it is not just can we apply old processes first, second, third line of defense. It is what is then this technology capable of enabling for a certain use case, a firm to actually effectuate. Last year, we had Teresa Heisenrether from JP Morgan Chase speak at our AI symposium, and she talked about it's not just simply like how is it improving what we're doing and our output. She's Chief Data and Technology Officer at the bank there. She said it is introducing new ways of how we think about what we are ultimately trying to produce. And so it's even at that sort of applied level, what you're trying to get done, how you go about doing it is probably going to be changing. And that does then raise questions of how does a CEO stay connected sufficiently? What is the real sort of role of leadership at an institution? And I think the culture point is a really good one because at the same time, at the very applied level, things are changing so remarkably because of what the technology enables, as well as how it is being done. What's the CEO really able to bring in and provide in terms of support, but also cultural expectations around how you do it responsibly, with values, with integrity. That's one piece. I also think it's worth saying, the banking sector, the financial sector is having to figure this out, both because of its role in the economy, the global economy, but also because we have laws and regulations that stipulate what has to be solved for and done, right? Fairness, explainability, et cetera. I think there's the opportunity for bringing what we're learning in the financial sector to other sectors where there are these high stakes questions, and really sort of that sharing of how are we doing it within banking and financial services to something like healthcare, to other sectors.
Thanks for that. Let's.
Are we running out of time?
We've got about 10 minutes, so let's
Yeah.
open it up for some high stakes questions from the audience. Thank you, Melissa and Andrea.
Yeah.
Hi, I'm Jim Stannard. I come at this from the insurance and reinsurance business perspective. It's interesting to hear about banking, but a little bit outside my risk management purview. But I just a couple of points thought it was very interesting, but it just I'm afraid, effective regulation is super important, and I'm afraid that using sort of the same speed and same structure of regulatory processes that we've used in the past is just too slow for this problem. It will fail. So we need to have some new SWAT team approach or whatever to figure out what are the key important points and how's the regulation going to respond. One of the points you're making that I think is relevant here, they'll push back a little on, is this issue of who are going to be the winners and losers. The fact that AI can make a small organization 10 times effective, 100 times as effective. I mean, there are small, smart, fast organizations that can beat JP Morgan, not at its big business.
Can I urge you
but
to
at
get
some
to the question?
Huh?
Since we have limited time.
My question then is, what are the regulatory, how could regulation change in terms of addressing that?
Yeah, it was our last question. I appreciate the feedback. I agree with you. There has to be space for the regulators to give industry the ability to show what they're doing, what they're grappling with, name the hard questions, legal questions, this identity piece where their fraud is an enormous risk and issue that is in front of us already because of AI. Money actually moving when we move to an agentic world, get that. And so there has to be more of an open door with the regulators and some space for some level of failure or errors to happen so that the regulators are sufficiently learning, what is industry grappling with. Congress also has to lean in on this. We've got to get more definitions around data access, data sharing, privacy questions. Absent that, you just have market actors competing against each other. And I hear you on the non-bank competition side. That is a real risk. So I join you. I don't think anybody's quite got the answer yet. I do know there are some ideas about leveraging third parties as evaluators of some of these models so that things could go more quickly. That's another idea that's definitely being thought about.
And once agentic AI becomes safer, you can leverage AI tools to help regulators move faster as well. So I think that's going to be part of the mix is we need to create more agile governance tools, regulation, sort of supervision tools that can move at the speed of change that's happening. But we're not there yet.
And better coordination. I mean, you're in insurance, state regulated in many cases versus federal. So that conundrum is definitely a factor.
Good.
No.
Yeah, speak loud.
Okay. I feel I need to intervene. My name is Celso Brunetti. I work for the Federal Reserve regulator, and it's a very interesting discussion. I'm enjoying this very much, but I must say that we are always one step behind. By definition, we do use AI. We have to install it on our system, but because of security reasons, we don't have the latest technology. We are always looking at the last crisis, trying to learn from that, and we don't have access to the same technology. So for us, it's a very difficult issue to address. Any suggestion, any way to look to work together, actually, to me, that's the only way forward. Yeah. Thank you.
I will just name this. I mean, it's part of why we do what we do at FinReg Lab is because regulators themselves are worried about their own liability if they get it wrong, right? And so there's got to be some space for learning and some errors, even at the regulators' side of things. But everybody's worried about the headline, right? You don't want to be caught being the one who didn't catch the big whale, right? So this is an aspect of how we're going to have to make some space for the information to be shared, including with regulators.
We have time for one more question.
That woman up there?
Yeah.
Yeah. You just want to shout it?
Let's not risk it.
Just for the Zoom.
Thank you. Good morning, everyone. My name is Maria. I'm a grad student at the University of Notre Dame. I study global affairs. And actually, that's kind of the question that I would like to ask, kind of connected to it. And you've mentioned the inequality and the worldwide inequality in general. And so when the countries that for now are behind the tsunami that we're talking about, when they have enough resources and infrastructure to deploy the technology, do you think they would be better for them to basically adapt what we already have or develop their own learning from existing technology? And regardless of the path that they would take, how do we mitigate the political or economic risks of either way they will basically use? Thank you.
Yes, that's directed at me.
Mhm.
So, I don't think countries that don't have their own major efforts underway yet are obviously behind the curveball, so to speak, and they will need to adopt and deploy some of the bigger LLMs and products and services that exist right now. That doesn't mean that in parallel they can't create their own sovereign AI or some other types of AIs that draw on their cultures, their languages, their customs, and their industry and everything else that happens. So I think it needs to be a parallel approach where you don't fall behind altogether because you need to stay up. And so you're going to use Claude and OpenAI and all the other ones, Perplexity, some of the Chinese based LLMs. So that's where the national security piece comes in too, is who's going to get in first with some of the countries that don't have their own capabilities yet. But that's okay, obviously. But I think if I was consulting with a country that was asking this question, I'd say use everything you can from the marketplace, but also develop in parallel your own capabilities, because at the end of the day, you want to have some of the native industry and companies and consulting and everything else that goes with it. And you never know, the leapfrogging piece might actually happen. So as someone mentioned earlier, and we've been reading, you can have a unicorn with two people now. So that unicorn could be anywhere in the world. You could have, a $1 billion company created by two people in a small African nation, for example. So I think there's a huge amount of opportunity as well.
Time for one more.
There have been a few references to Goodhart's law. By the way, he's 89 and still publishing on risk management issues, so he's still in the game. One of the interesting ways that you sometimes handle Goodhart's law is to create an environment where disconforming information can be surfaced. That there are ombudsmen, there's not necessarily such a formal risk management structure, but in medicine, in air travel, the way to bring up uncomfortable truths and be safe in bringing that up is one of the ways you sometimes can make the system work better. Is that kind of approach being used in AI, and is that a possible way to get around some of the issues with Goodhart's law?
I would love to talk more. I don't think so at this point. But I think that's the kind of thing we need both on the regulatory and the legislative side.
And I would add that within companies, to protect yourself and to have good risk management, one of the core, age-old, but even more important now than ever, tenets for me is have those cross-disciplinary teams working together on these issues, on these problems at the beginning of the life cycle, all the way through the end of, inception of data and algorithms and creation of software and so on and so forth. Have those cross-disciplinary teams with eyes on those issues all along so that they can do that kind of, uncomfortable truth discussion so that the ethics person is working with the engineer and sort of saying, oh, is that, should we put some guardrails around that because of the downsides? And we don't know what the downsides are, but I think more and more we need to have those kinds of discussions.